So how do you sell your stocks when the stock market is crashing? It's actually a hard thing to do for emotional reasons, and I will tell you some things to think about that will hopefully help. Plus, I will do my regular weekly market analysis. We'll try to figure out if the market is going to crash. And of course, we'll look at the day trade of the week on APDN and search for opportunities with the Stockscores Market Scan. Last week, I talked about the signals to watch for to determine if the stock market is going to crash. And if you missed last week's video, I encourage you to go watch that. Well, what I want to talk about this week is the actual psychological barriers that stop us from selling when the market is crashing. What we tend to do is we think about the stocks that we own and where they used to be. We'll look at Tesla and say, Tesla's at $650 now, but just 2 weeks ago, it was at $850. And I'll just stick with this and wait for it to bounce back. Now that is maybe okay if the overall market is still going up, because as the saying goes, the rising tides lift all boats. But it doesn't really work when the market is going down and the stocks you own are going down. You can get away with riding out little pullbacks in individual stocks if the overall market is still trending higher. Now, we still don't have a signal that the market is crashing. I'll talk about that in just a moment. But individual stocks are going to give you sell signals. And what you have to avoid is thinking about what was and instead focus on what will be. If a stock market or if a stock is giving you a sell signal, then exit the trade. If it's breaking its upward trend line and the overall market is weak as well, then exit the trade. You can always buy it back cheaper. And in fact, you'll be able to buy more. If it's a company you want to hold for the long term and the market is crashing, you might be able to buy a lot more in the future. Think about how much of a discount you could get on really good quality companies after the COVID crash from February and March of last year. So don't look backwards, look ahead. Think about what the market is likely to do going forward and how can you best profit from that. Now let's take a look at the chart of the S&P 500 index. And I just want to remind you of the bargains that existed in the market after the COVID crash. On the first blue arrow there, you can see that we broke the upward trend line and the market fell very rapidly. Over the course of the following month, it moved down a lot. But then it broke its downward trend line from a rising bottom, and so you could buy back here and get a lot of really good companies at a deep, deep discount. And that's really how you can profit from market crashes. So if the stocks you own are giving sell signals, if they are breaking upward trend lines, more importantly, if they are breaking upward trend lines from falling tops, take the money off the table and come back to them perhaps later once the market stabilizes. All right, so now let's think about whether the overall market is in fact crashing. We'll do our US market analysis, starting off with the S&P 500. We had a little bit of weakness on Friday, and so we will get some people concerned that this is the first of many days of weakness to come. However, the chart doesn't really support that yet because support hasn't been broken. The market is in this upward sloping channel, and it meanders inside that channel, and we have some distance to go before we get to the bottom of that channel. And so although the weakness of the last day and a half is worthy of concern, it's really not a strong sell signal yet. So we'll stay bullish short term, but don't be complacent. There is some need for caution given what happened on Friday. Now remember, it's a long weekend, so the markets will be closed Monday for the Martin Luther King holiday. Moving on to the longer term weekly chart, which I think is always important to take a look at that big picture view. Anytime you get sort of caught up in the short-term gyrations of the market, go take a look at that longer-term big picture view to get a sense of whether things are really turning ugly. So yes, we had a little bit of weakness on Friday and the afternoon of Thursday, but in the big picture, when we look at the 3-year weekly chart, you can see that the upward trend is still intact, whether you use that very short-term version or the longer-term version that looks something like that. And so there's really no reason to be concerned yet. But if your individual stocks start giving sell signals and the market is starting to roll over, then you want to get more defensive. The NASDAQ 100 also had a little bit of weakness this past week, but for the most part, it's really just been trading sideways for a while. The long-term trend is still up, and so we remain optimistic, but certainly the tech stocks are taking a bit of a break. Russell 2000, well, that's where the strength has been in the small caps. We had the breakout back in November, a nice upward trend since then. That upward trend hasn't been broken. We are sort of getting close to the bottom of that channel. We could draw another sort of more conservative upward trend line, something like that. I think if next week we start moving down through 206, 207 on the IWM, that you maybe expect a little less opportunity in those small cap stocks. But again, in the big picture, the upward trend is still intact. And while we may get something like we saw at the end of December, where we had a 4 or 5 day pullback, there's no reason to think that this upward trend is over just yet, because the upward trend line has not been broken. All right, on to the Canadian market. We always take a look at the TSX first. And here is the short-term chart of the TSX. Now, last week, I said that it was likely that the TSX would stall because it had risen to resistance on the 3-year weekly chart. And that's exactly what's happened. We've gone sideways for the last week, but nothing in the form of a breakdown, just a lack of upward momentum. It's a little easier to see when you look at the weekly chart. There was the resistance that I talked about, the old highs before the COVID crash. And we've made back all of those losses, and now we are getting stuck at resistance at the upward trend line. Not unexpected, not a bad thing. Markets that rally into resistance usually get stuck at resistance, and I think that's what's happening here. So let's take a look now at the TSX Venture. This is your microcap market in Canada, and cannabis stocks are doing pretty well these days, and that's giving this market some upward momentum. Meanwhile, gold stocks aren't doing so well, and there's a heavy concentration of those here as well. So I think when looking at stocks listed on the TSX Venture, you have to be fairly stock specific and look for those showing strength, showing breaks from predictive chart patterns. All right, on to commodities. Let's take a look at gold. Gold has had kind of a rough week or two. It tried to break this downward trend line, lasted a day, then it broke that little upward trend line. That was the breakdown. And now Friday moving lower. You can make money from gold moving lower through some of the inverse ETFs. JDST is an inverse ETF on the junior gold miners, and then DUST is an inverse ETF on the larger cap gold miners. And those ETFs were going up on Friday because gold was going down. And that could be a play short term anyway for those who want to take advantage of this little bit of weakness in gold. Oil, well, oil is kind of the opposite of gold. It has been moving higher for the last couple of months. It's in an upward sloping channel, pulling back perhaps to the bottom of the channel, but still a decent place to start to find opportunity. I've been seeing a few oil and gas stocks starting to show good patterns after really being ugly for a very long time. And now the fear chart, we always look at the VXX to see if fear is picking up. And there was a slight bump higher on Friday, but really nothing to speak of as the downward trend is still intact. Downward trend is still intact. We're still below this resistance, but this can come alive at any time. So we'll keep an eye on this if the market does start to correct. So my ratings then, bullish on both time frames still for US stocks, and nothing changed on the Canadian market, neutral long term and bullish short term. Gold, neutral long term and bearish short term. And oil, neutral long term, but bullish short term as it has some decent short-term upward momentum. Well, it is upward momentum that has slowed for stocks, and sellers seem to be getting a little more motivated, but there's still no major breakdown in the stock market, so we should not call for a falling sky. However, we should watch closely for one because we are overdue for some profit taking. Now, gold, particularly in the small caps. Gold is falling out of favor in the last little while oil is finding some. Fear is low, but it has had a slight uptick, so we should keep an eye on that as well. All right, so now let's do our day trade of the week. And again, I do this for educational purposes for those who aspire to be a home day trader or even a swing trader. We run a service on Stockscores every day called Active Live, where you can watch my analysis screen. Plus, I talk and guide you through the start of the day and the end of the day. We do a little education every day. So you're watching real-time alerts, real-time analysis. It's a great way to learn how to day trade and also to find opportunities before most people find them, because I've built some things that you just won't find anywhere else. So you can learn more about that on Stockscores. What I want to talk about today is a sell signal, because I always talk about the buy, and I'll talk about the buy on this one as well, but also why you would sell this and where. So let's jump into the chart. This is APDN, stock that I bought on Friday, and bought it because it came alive. Nothing going on. This is Thursday's trading right here. And then on Friday morning at the open, it moved up with some volume. It made our action candle indicator. So I don't know what this company does. I don't care. I'm just trading market volatility and running my algorithms. And the algorithms said it was a good time to buy the stock. Now, it tested my patience because it went down before it went up. And then it started to come alive and broke through the action candle close, which is our second signal. And then it went parabolic to the upside, hitting 11 times its risk amount. Now, anytime a stock gets up into double-digit risk rewards, I start to look for an exit signal. And there's a few things I look for. One is called a bursting bubble. And that's what happened right here when the stock hit a new high, closed below the open in a parabolic uptrend with very strong volume. So that would be the most aggressive exit. And that was at a +9 reward for risk. The other thing we look for is a break of the upward trend line, and here we had that from a falling top. You can see the falling top there, break of the upward trend line. That was probably your more reliable exit signal, less aggressive, but given that the stock was up as much as it was, and given that the market was pretty volatile with some downward volatility on Friday, I think that was probably the best exit signal. So that was at 7.5 times risk. So now let's go through the economics. For every $100 of risk, you would buy 400 shares. Every 400 shares is going to cost you a little over $4,000 in capital. Because this stock is over $3, you can margin it 3-to-1 if you so desire. So that gives you $1,352 to take this trade. It gave a 7.5 times risk reward multiple, which meant for every $100 of risk, it made $750. That is a 55% return on your risked capital or your used capital, and that is on a one-day hold. Really nice little gainer there on Friday on a day when the overall market wasn't looking so good. All right, well, now let's jump into the Stockscores website, and we can go in search of trading opportunities. Now, given that the market was down on Friday, I don't have great expectations that we're going to find anything, but if nothing else, I'll highlight a few things to think about when analyzing stocks. So we'll jump over to the market scan tool. I'm going to run the abnormal breaks US scan. I run these two scans every day, usually in the final hour or in the evenings. And again, those that have taken my investor or active trader courses have access to this tool. They can subscribe to it. Otherwise, it's not something that you can use, but it's a great way to save time and really focus in on the best opportunities. So it found 46 stocks that meet the criteria of this strategy. And now it's a matter of looking at the charts to see if they have good chart patterns. And I can blow up the chart for any stock. So I could blow up this one. This is a real cheap stock. I prefer not to trade things so cheap, but nonetheless, the patterns are the same. This was a stock worth buying back here when it broke from low volatility with abnormal volume. And it's had a great run since then, but I don't like to come to the party late. although I do think that this stock is more likely to go higher than lower, I don't like it enough to buy it here because really I should have been a buyer back in August. So that's the process, is we're going to cycle through these charts looking for stocks that are breaking from predictive patterns. Now here's another one that's breaking from a predictive pattern, huge volume. However, it closed well off of its high. You can see that really long tail there, and it's still below resistance. We can sort of draw resistance in there. So that's not really ideal. I don't like that sort of a situation. So I cycle through looking for stocks surprising the market with strength. This stock surprised the market with strength as well. However, it also had a very long tail. It also still closed below resistance, so not good enough for me. Now, if I see something I like, I then blow it up. And then if I think it has some potential, I look at it on a 3-year weekly time frame. Now, this one has been heavily rolled back, so the chart doesn't even work anymore. Let's keep moving down here and try to find something that's a little bit more informative. All right, so we'll take a look at this one a little more closely. This is MBII. It's breaking out to new highs, has been going sideways for 4 or 5 months, traded pretty strong volume, pretty abnormal volume on Friday. The stock scores are in the right place. You can see that the green line, the sentiment stock score, has risen above 60, which we like to see, and the signal line is above 80, which we like to see. That tells us that there is probably a good chart pattern. Now we want to take a look at the 3-year weekly to see where there is resistance. And the stock is going to find some resistance in between $1.50 and $2 because it traded quite a lot of volume there. It was 2 years ago, so that's probably not going to be strong resistance, but given that that exists, I would rate this one a 6 out of 10, which means I think it has a 60% chance of moving higher. If you want to learn how to do all that kind of stuff, how to read charts, those are things covered in some of the education that we do on Stockscores. You can go to the trader training menu, learn how to trade, learn more about that. All right, we'll just about finish up for this round here. I'm not going to go through every chart, but see if there's any more lessons to teach from some of these things. Notice this stock right here. It had a big gap up on Friday, really nice pattern. But when stocks gap up like that, it's usually because of news, and a lot of the good things are priced in already. But what's more notable and what's more of a disappointment is that this stock closed below its open. See how it's a red candle as opposed to these green ones? What that means is that it closed below where it opened. So it opened just under $5 and it closed just under $4, which meant that people that own this stock were selling into the strength. And yes, it traded big volume, probably has something good happening, but it's not a great sign when you see a stock close below its open like that on the breakout day. So again, do I think it looks pretty good? Yeah, 6 out of 10 good, but not 7 out of 10 good, which is what I like to do if I'm going to buy a stock. All right, well, that's a little lesson on how to read charts, a little lesson on how to exit a day trade, and some things to think about, those psychological things to overcome when you've had a really good stock that you need to sell because the market's rolling over. Don't think about where it was a week ago. Think about where it's going if the market is crashing. Well, if you like this video, please click on the like button, leave a nice comment, and subscribe to the channel. Click on your notifications bell. Most importantly, as you go into next week, trade well.